Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention, and fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking. This is your spectator of the spectacle coming to you live from deep inside the Upside Down and the Topsy-Turvy. Today we've got a bunch of articles we're going to look at. I'm not going to dig too deeply into them. We'll just have a sort of look at the surface level, the main points, and the headlines. We're talking about the economy, the pandemic, specific stocks, Nike, the other shoe has dropped apparently, it looks like, how the stock markets are doing, and some slightly worrying news about Ethereum mining particularly. And then we'll go, of course, to the Magic 8 Ball for today's question. See if we can suss out any unknown tidbits from the Magic 8 Ball as our main analyst, which is just as valid as some of these other talking heads and these talking clowns that we've seen on TV. First off here, The Guardian. More than 20 million Americans could have contracted COVID-19, experts say, and these experts are the CDC. New estimates from the CDC indicates many without symptoms have or had the disease, senior administration officials said. U.S. government experts believe more than 20 million Americans could have contracted coronavirus, 10 times more than official counts, as cases are now rising in more than half of states, and a new warning came out of the risk of apocalyptic infection in major cities. Cases are now rising in 27 U.S. states, up from 22 earlier this week. And a lot of those are southern states where it's apparently warm. And we were told, weren't we, that the summer heat was going to kill the virus. Well, allegedly hasn't done that. Texas, of course, is one of the states hit, as is California, Arizona, I believe, Florida as well. So it's quite worrying, folks. Obviously, continue to take good care, use good hand hygiene and general hygiene out there. Masks are recommended. They use them a lot in Asian countries, and that seems to help. We certainly saw that in South Korea. And if you have a mask, it might be worthwhile. It helps you more than others, but it does help you to some extent as well. This is from my understanding. Do your own research, of course. None of this is advice or financial advice specifically. New York court tosses lawsuit over Trump family tell-all book. I thought this was interesting. This is a book by Mary Trump, the president's niece, scheduled to be released at the end of next month. A New York judge on Thursday tossed out a lawsuit intended to block the publication of a book by President Donald Trump's niece. The book by Mary Trump, daughter of the president's brother Fred Trump Jr., is titled Too Much and Never Enough: How My Family Created the World's Most Dangerous Man, as an authoritative portrait of Donald J. Trump and the toxic family that made him. Another of the president's brothers, Robert Trump, went to court to block publication. There's Robert Trump hugging his brother Donald, I think just before the election in 2016. Anyway, the reason I bring this up, not because this is a political channel, as you know it's not, but politics, of course, inform the economy, because government really is instrumental in creating this nonsense that we're currently in ourselves right now, along with the central bank, which of course is a privately held institution, which is another problem too, right? But I thought this was interesting coming on the heels of the John Bolton book, which I think might have been, correct me if I'm wrong, but it might have been Donald Trump who had tried to stop the publication of that one. So it's interesting. Obviously, there is a lot of skeletons in the closets here of the Trump dynasty, if you will. It'll be interesting to see how this affects perhaps his polling, because as we're coming up to the November elections here, of course, it appears that Trump is behind in the poll against Biden. And I don't think that these particular tell-all books from Bolton and now Mary Trump will perhaps specifically help him. It seems that there's information in there that arguably the Trump family is disinclined to have made public, right? It'd be interesting too if we ever get to see his tax returns, but that might only happen after the fact, right? No more crossing borders for work. Multinational U.S. corporations are built on international travel. Apple, for example, spends $150 million a year on air travel, for instance, and pre-coronavirus was buying 50 business class seats per day just from San Francisco to Shanghai. U.S. borders remain shut to travelers from China and Europe. For example, even the 6,000 L1 visas, which allow executives at multinational companies to move from a foreign office to a U.S. location, have been curtailed. That's interesting. However, here's the rub. Visas that normally go to wealthier and whiter foreigners, such as E1, TN, 01, or I visas, are unaffected. Thought the Trump administration was going to drain the swamp. Appears that they like the swamp. If multinational companies can't bring talent to work for them on US soil, their move to remote work in foreign hubs will only accelerate. Here in countries like Canada, where I am, are jumping at this opportunity to attract global expertise. And people have been saying for a long time, of course, the CEOs of many of the multinationals, Google, I think Microsoft came out against this as well. Surprisingly, I think Apple was mute on it, but I believe Sundar Pichai and who's the guy in charge of Microsoft? I can't think of his name just off the top of my head. I think both of them came out to suggest that immigrants were important, especially well-educated immigrants were important in helping the economy and in providing the jobs that are well-paying, which pay better taxes, arguably. Regardless, immigration is important for an economy, especially developed economies, because our birth rates are so low. We need to keep at least a certain amount of population, otherwise we produce less consumers. You see how they think, right? They see us as only consumers, and that's the bottom line. But here we have the US government and the US itself, which is practically a country of immigrants, right? Being denied further opportunities. I myself am an immigrant to Canada, of course, from South Africa originally. But immigration is important. I think it helps us better understand the world when we interact with those who are different to ourselves, both culturally and perhaps in the way they look. More than that, they bring in fresh ideas. So I'm a fan of immigration, when it's done well, of course. You can't just allow any riffraff in like they did with me, but that's a different story. Trump administration sent $1.4 billion in stimulus checks to dead people. The U.S. Government Accountability Office said almost 1.1 million dead people received payments of about $1,200 each as of 30th of April. And this is when 1.48 million Americans filed for unemployment assistance last week, bringing the total since the pandemic began to about 47 million. So we've got some real problems here. Now, $1.4 billion is perhaps nowadays just chump change, right? Or perhaps Trump change. In the greater scheme of things, we have a lot of trillions of dollars. We have trillions of dollars, really, that they're talking about just disseminating to their cronies. And this $1.4 billion that went to dead people is just $1,200 each. But it still tells you, it shines the light, in my opinion, on the incompetence of governments generally, and why I'm certainly waiting this period out. The stock market is insane. The bond market is in a bubble. Real estate's in a bubble. Very few areas, in my opinion, where you could put money safely for an honest return, right? These nosebleed levels of the S&P 500, the Nasdaq especially, I'm certainly not putting money in there. It's hard to tell and to value companies appropriately. Anyway, I thought this was interesting. These are the jamokes that are spreading our money around, or perhaps not even our money. They're just creating money out of thin air and spreading it around to dead people even, while those who really need it, as I've heard historically of some people, are really struggling to actually get their checks in the first place. And that's a problem, especially amongst the unbanked who can't accept digital payments, right, who need a check. And a lot of those people can't accept checks either, because I imagine a lot of them are of no fixed address, right? So it's a real disaster unfolding. And it's not getting better just yet, despite the reminiscence to the contrary. Every state has started to reopen, but smartphone data suggests people are still reluctant to go out. And we'll have a look at this here. All 50 states have started to reopen now in the US. But phone location data shows that people across the US are moving around less than usual. Even in major cities where car traffic has returned to normal, people are walking and taking public transit far less than usual. And we'll see that here in some of these charts. So this is across the US. Driving traffic has largely returned to normal after a dip spanning March through June. But the number of people walking and taking public transit remains lower than usual. And you can see the purple here is transit. And walking even is the yellow is down. The only thing that's up is driving. People are choosing driving over walking and transit, of course. The US is still far more mobile than several European counterparts, despite the fact that COVID-19 cases are rising more rapidly in the US, and arguably perhaps this is a reason why they're rising more rapidly. The United States is in gray, and it's way more mobile than Germany. Germany sort of returned, well, a little higher than its peak, and Italy has now bounced back to a normal. United Kingdom has not quite yet. And the trend is borne out in most major cities. Here in Los Angeles, California, you can see that not even driving has returned to normal. In San Francisco, the same, even worse. Driving is nowhere near what was normal. New York City, of course, just recently, driving has come back to sort of the normal level, but walking and transit are not. Of course, they've had a severe lockdown for quite some time. Here's Atlanta, which has pretty much almost gone to normal. And of course, as these cities return to normal, we see that especially in the south here, Atlanta, they're starting to see more and more cases, right? Which should be obvious. And Houston, the same thing, right? Walk-in has returned to normal, driving almost, which means maybe people are going out and about, having to go back to work. And now we see these cases spike in Texas and Georgia, places like that, right? In Phoenix here as well, Arizona has also been impacted. However, they haven't returned quite to normal, but still have improved. I just thought it was interesting to look at some charts here that suggest that much as, the clowns in control want to feed us pablum, that everything is back to normal. It's not, certainly not, and it won't be, I don't think, for some years to come. IMF warns disconnect in financial markets risk a correction in asset prices, and a correction is considered 10% a down move, a 10% decline in the price of an asset or index or more. The International Monetary Fund has warned that the ongoing disconnect between financial markets and the real economy could lead to a correction in asset prices. It's Captain Obvious to the rescue, of course. Recent data indicates a deeper than expected downturn, the fund added, but markets appear unfazed. Yeah, they do. The IMF estimated earlier this week that the global economy would contract by 4.9% this year, before growing at a pace of 5.4% in 2021. See how nice those numbers work out together? See, 5.4 is more than 4.9. So, in fact, if you add them up, then 2020 is going to go down as just nothing to be really concerned about. Because for the 2 years, growth would have been down 4.9, up 5.4. So make it 0.5. That means no, growth was over the 2-year period was an average of 0.25%, right? Positive. This is the joker's number. This is a clown's mathematics right here. There's no way that I see the global economy increasing by 5.4% in 2021. I'll be surprised if it even has positive improvements above zero, I should say. We'll certainly perhaps see 2021 as being better growth than 2020, but I still think it'll be slightly negative. But we'll find out, and we have the magic 8 ball to tell us as well. Federal Reserve places new restrictions on banks, freezing stock buybacks and limiting payouts. So now they're starting to try and do something in the market to help pretend as if this is not just crony capitalism and all those trillions is going to their hedge fund buddies, right? The Fed Reserve is finding that several big banks could get uncomfortably near minimum capital levels if the coronavirus pandemic worsens. It's now requiring them to suspend share buybacks and cap dividend payments for the third quarter of 2020. In the 3 downside scenarios that they used, the unemployment rate peaked at between 15.6 and 19.5%. Folks, we're already over 19.5%. I'm not sure what these federal clowns are thinking about, right? These federal fakesters. Loan losses for the country's 34 biggest banks range between 560 and 700 billion. We're going to be in the trillions by the time it's all done, folks, and we're going to have some bank losses, I'm sure of it. There's going to be banks going into foreclosure and bankruptcy. That's my opinion. Stock futures dip after bank stress test results. Nike reports surprise loss. So Nike has found the other shoe to drop. I don't know if it's Nike or Nike. Anyway, Nike shares slid near 4% after the bell on the back of a surprising quarterly loss for the apparel giant. The company reported a loss of 51 cents per share and revenues of $6.3 billion for the fiscal fourth quarter. Nike's quarterly revenue dropped 38% on a year-over-year basis. This is the beginning, folks. We're starting to see quarter 2 numbers, which are going to be atrocious. And perhaps the S&P 500 will gain another 20-30% this quarter because of these numbers are so bad. In fact, let's take a look at the markets. Okay, here you can see the S&P 500 down almost 2%, the Dow 30 is down over 2%, NASDAQ down over 2%, and the Russell 2000 down over 2%. Crude is down and gold is down. We'll see what happens. Arguably, things will change perhaps during the midday and we'll start to see an improvement. I wouldn't be surprised if we're in the green by the end of the day. This market is so full of lunacy that it's hard to take it seriously. We should also look at the coin market cap too. Okay, so here's the coin market cap. The top coins are Bitcoin and Ethereum are down a little bit. Tether XRP up slightly. Litecoin up slightly. EOS down a little bit. Cardano down. Crypto.com coin down. Tezos down. Chainlink down. Stellar down. So mostly down, but some are up. There's a big one up here too. Unis, SED, Leo. I have no idea what that is, but that's on a bit of an uptrend. Okay, and into cryptocurrencies. So here's an article that's a little concerning, but folks, in the early days of a new asset class, there's going to be some volatility as we sort of find our legs and a solid foundation. Ethereum miners spam the blockchain with small transactions. These pools may be doing so in order to harvest mining rewards from the same transactions they send. And I don't know if you've been hearing recently, but it appears that ETH fees or gas fees on the Ethereum network, which are the transaction fees, I think have been higher than Bitcoin recently, and perhaps this is one of the reasons. There's been over 1 million transactions. It's a high point that's not been seen since 2018, as you can see here, which was when we had the Ethereum at the highest price it's ever been. Several pools are partially responsible for those transactions. Ethermine made more than 13,000 transactions over 24 hours. Nanopool and Sparkpool behave similarly. The average transaction fees are 75 cents as of June 24th, which is not inexpensive in my opinion. They really should be pennies. Miners or pools are sending these transactions to obtain the rewards that come from mining them. This behavior is supported by the fact that some transactions are as small as 0.001 ETH or a quarter, suggesting that the real value is actually contained in the transaction fee. So if you're sending a quarter to earn 75 cents, you're winning, right? And perhaps that's why these fees have been increasing. Anyway, something to be aware of. I'm a holder of my cryptocurrency currently, and I probably will be for the next while anyway. And especially in this nascent early days of this industry, where we're trying to find fees and get a place of sort of more foundational, smooth volatility, right? Okay, folks, so that's where we're at now, and it's time for the Magic 8 Ball. So the question I had for the Magic 8 Ball is, will there be any economic growth globally in 2021? And the reason I asked this question, because the IMF Idiocy and the clowns at the IMF, the Captain Clowns, have suggested that growth could be 5.4% in 2021, and I think we will see probably slightly negative growth, GDP growth, compared to 2019 levels, I should say, in 2021. So I wanted to see if the 8 Ball is in agreement. Will there be any economic growth globally in 2021? Don't count on it. Hey, well, there you go, folks. You heard it here first. The Magic 8 Ball analyst has said that there will be no economic growth globally in 2021. We'll probably have to wait until 2022, which is what I suspect. All of this has happened before, and all of this will happen again, folks. We know how this is going to evolve, and it's certainly not going to be this V-shaped recovery that they keep trying to force feed us by taking us and making us hit the hopium pipe. And the fog of that is starting to lift, and we're starting to see the real truth behind the smoke and mirrors. We're in for a longer, probably a more of a L-shaped recovery, a longer recovery that'll take some years to get back to where we were just in 2019. I wouldn't want to bet on us getting back to 2019 levels much before 2025, but hey, I'm just some random internet dude on Blabberlon, so that's just my 2 cents. Thank you for listening to my 2 cents. I appreciate you, and I hope that life is good for you wherever you are. You're able to save some money, pay down some debt. I think now's the time to be really reassessing any major purchases that are unnecessary. We need to be holding the fort, putting some oil away for the lamp as these dark hours come to us in the next 18 months or so. So keep the faith, hold tight, buckle up. Thanks for listening to me, and I appreciate your thoughts down below. And remember, dum spiro, sparrow.